Okay, let's see how it goes. How shall we go? Make some money. I know my entry and I know my exit. I think I'm okay. I'm making money in the community as well. I need to send it out. I need to let them know. So make sure to click in the link in the description to join the Telegram community so that you can be getting gold trades like this for free. Guys, you saw they're just making money for free. Right, let's get right into the video. In today's video, guys, I want to show you guys a secret that has been playing such a pivotal role in my journey as a trader. Something that has not really been kept as a secret, but comes off like a secret. Why? Because I barely and hardly do talk about it, which is how I really look at candlesticks. And for me, I think that if you are a beginner and then you're starting to learn how to trade, that's like one of the most primary thing that you need to learn before you even get started, which is like how to read the candlestick like a pro. Because if you know how to read the candlestick, then guess what? You would not even need to wait hours, days for setups. You can just skim through the chart, see how a candlestick is playing out. If it fits what I'm about to show you now, you can easily scalp, day trade, and make some quick bucks and grow your account. So without wasting much time, we're going to dive right into how I read candlesticks like a pro. So the thing I'm going to show you guys is about understanding how candles close. Right, I think something that is very underrated in trading is that so many, even professional traders, even advanced traders, don't really understand candle closure. Now, for me, whether I'm going to take an entry in a trade setup or whether I'm going to avoid that trade, extremely is reliant on how that candle closed. And I'm going to show you guys a few illustrations and then go deeper into how you can literally start reading the market, especially the candles, and making informed decisions like that. So consider various trading setups, right? You guys know my setup. I taught you that for me, I like to take trades on the highs and then on the lows at a swing point before a trend takes off. For instance, let's say the market goes up like this, it hit this level and then it comes down like this. Obviously, there was no reason for me to take a trade here, but if this is my resistance level and the market comes back here, I'm looking to be interested in taking a trade around here. Similarly, if the market was trending downwards and it hit this level and then it comes back again, and then this level is marked as my support, when the market comes down, it's here that I'm looking to find a trade entry, right? So for here for a buy and here for a sell. We can also apply the concept of Fibonacci. When the market is trending upwards and make a retracement, and then we look for the 50, 61.8 or 78.6 retracement region, and then we look for a trade for a buy. There are also instances where we can also look at the trend line scenario where the market has literally gone on a fair swing, establishing a point 1, comes down, goes up on a second swing, establishing a point 2, then we can establish our trend line in hopes that the market is going to come down to our point 3, and then we find a trade for a buy. So these are very simple, straightforward entry criteria that I follow. But the point is, this is just not enough. You need to also understand the intricacies of how the candles close to be able to determine that is it the right time, even when the market is at the right zone. You get what I mean? So sometimes people check mark the market being at the right zone, but what they don't check mark is the market at the right time of entry, or is the particular chart in terms of the candles at the right time of entry. So you could be right with the zone, but you could be extremely wrong with the entry timing, and that could take you out before the market furthermore goes in your favor, and you come back and watch the chart and be like, I was right in this direction, but it took me out before. And that's such an example that thousands of people see on a daily basis, and you don't want to be a part of those people. So make sure you watch this video to the end to understand. So I'll give you an example, right? A simple analogy is, let's say I'm watching the market. We've already established we have a high, it hits a particular level, and then it comes down, and then let's say this place is my resistance level now, and the market is coming back into this zone. So what I'm going to show you is like the candle analogy that you must understand. You remember that for the purpose of this, we're establishing the blue, right? Any blue candle I'm going to draw as our bullish candle, right? In fact, let me draw this one with a black, so that's everything that we do here is more clear, right? So the trend is going up like this, it hits this level, comes down, we establish this line here. the market goes up like this. So from here I can draw the candles, bullish, 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 and then finally we are here in that zone. Now that we are in this zone, right, there are certain things that you need to be following, or there are certain conditions that the market needs to be fulfilling around this range, especially with the candles, before you finally say that, okay, I'm going to jump in this thing for a trade, right? Let's look at the first example. The first example is that if you have, let's say, a bullish candle, there's so many reactions here, and then the last candle, right, and the last candle of the bullish candle here was looking something like this, nicely closed, and then you're determining that, okay, I need to find a bearish reason to jump in on this trade. Right now, if you have the candle looking bullish like this, there's no point just buying or selling. In fact, they're predominantly selling, right? You get most people having the market look like this, the bullish candle is literally standing right up in their face, and they think that for some reason their liquidity is enough to suddenly turn the market upside by starting to short the market here. When you do that, guess what? You're going to take a loss, a big one as such. Why? Because the market is still, it's like you're jumping in front of a moving train. This is the example that I always say when I say, do not jump in front of a moving train, right? So you don't want to like buy in situations like that. You don't even want to sell in situations like that. You want to start observing bearish signals in this range. So an example is like, let's say here, I find a candle that comes next, and then it comes to close strong like this with very small head. What would I do? I will sell. That's a very right setup right here. Either ways, if I see this candle even extend further down and still closes as a strong bearish candle like this, I would even sell the most. Also, another angle is that, what if it doesn't close strong like this, but it closes with like a long wick, and then the body just starts coming down from here like this? In this situation, it's still ripe for me to what? Sell. Or perhaps we have a situation where the wick is still upstanding like that, and then the candle goes further like this with a strong closure on the head. I'll still do what? Sell. So I'm telling you all the situations and scenarios that would let me trigger a sell right at the closure, right? Right, guys, remember this is the most important part, right at the closure. So right at the closure means that what? You must be right in front of the chart, watching the market just at the time when that candle closes, then you execute right on time, right? That's like one aspect of it. Situations where I'm not going to take a trade, I'll explain that one to you guys as well, right? When we have the market in a zone, and then we have, let's say, a bearish candle looking like this. We have like the wick here, and then it closes, and then a small body, and then a long wick like this. No trade. Most people tend to take such trades. Most traders tend to take such. It's just going to be, the market is in a resistance zone, so they're going to start selling. Wrong. Why? And I explain it to you. You see, the wick in the market, or the wick in the candles, signify something, right? When a candle is forming, right, let's say you have like a candle closure like this, right? So this is the open and this is the closure. The next candle starts right off from the close. So if this one also comes, and then this is now this one will be this one's open, and then let's say this one's also closed here. So this one, the next candle will also appear right at this close, and that's how the candles trade, right? But when it opens here, right, it can actually decide to either go up or come down. So if in this term, this candle comes down within that hour of trading and goes up again, let's say up to this point, and then comes down to come and close somewhere here. Here will be the open, and here will be the close, and here will be the low, and here will be the high. And that's how candles form. So this one will probably have a different color, maybe blue, because it's bullish now. And then that means that the next set of candle will also appear here. But what I want to explain particularly is that within that period where you have like the market trading within that range where the wick is going up and sometimes coming down, that is what we call price action. So it's the action of the bulls that is pushing the market up, and it's the action of the bears that is pushing the market down, right? So in that sense, if you have the wick coming up like this, it means that it was the bulls that were pushing the market up. And if you have the wick coming down, it was what? The bears that was pushing the market down. So bringing it to this scenario, what you can observe is that even though the candle is bearish, the last people, because obviously if you're seeing this and it's bullish, it means that the opening was here and then the closure was here, right? So if here is the opening and then the market came down and eventually came to close here. Look at where the closure is. It means that the bears were the last people to push this market up. Bears, right? And if it's the bears that push the market to the last point, it means that what? They have some significant control within that range. Having some significant control means that if you go trade in contrary of the direction of obviously the bears, then let's say in this zone you're doing what? You're trying to sell, the next candle can easily go up and it's going to hit your what? SL, right? So I've practically and intentionally explained the logic around the wicks. So I'm going to use that to also illustrate other candle patterns that I would not trade because of this logic, even though the market would be in the right zone, right? So you could have also another situation where the candle is going to look like this. The market comes down and then it closes nice like this, but the wick is down there like that. This one too is not ideal. And then you could have situations where it has, let's say, a small body down there like that, with a long wick and then another long wick like this. This is also not ideal at all. Not ideal to sell. Not ideal to sell. So guys, you can see that I've given you a simple analogy and anatomy of how I look at candles in the closure zones or in the entry zones before I take a trade. This is just like part one. This lesson can go deeper and deeper, and I want you to subscribe to this channel, clicking the link in the description to join the Telegram community. As you saw, the trade announcement is going on. I send out the trade for gold buy for free into the community, and I make sure that I really dissect this pattern or these lessons into the peak so that you guys are going to grasp the real meaning of candlestick anatomy. But you know what? Go and back test on all the entry zones and go and back test on all the candles that I've shown you, or all the tricks that I've showed you here, and leave a comment and tell me what you're thinking, right? Maybe you have a question, also ask it. I'll make sure to address it in the comment section. Make sure to follow me on all social media at KOJO Forex, but don't forget to click in the link in the description to join the Telegram community. Now I'll see you guys in the next video. Peace.